Maximus Analysis here for February 12th, 2016, and we see we had a huge up day. Again, we spoke about this yesterday, tapping this time this angle right here, but more so the weekly options that we discussed yesterday, the weekly puts. There probably was a ton of them, and they kind of crushed those. And again, it is what it is. And I explained yesterday, if you didn't see, why the weekly options are more for their side than for us. That being said, we want to see what happens with these guys at this 1880 to 1900 level. See if they're going to continue follow through with volume. Again, the first day doesn't have to have a huge amount of volume. It's usually the volume has to increase as you go up. And usually during the capitulation high, you'll see the highest volume. So just kind of, and look at it like this. Over this side, when you had the capitulation low, you had the highest volume. Another low, high volume. So if you want to see it to continue up, you don't want it to be going up on declining volume. So again, we want to see how they look. And again, during these volatile times, again, I will restate that aggressive trading is probably the best, meaning holding stuff for 1, 2, 3 hours. Intraday, if you can, because the moves can be very swift. Again, they could come and take all this back, and we just got to play it accordingly. In times like this. So again, those levels are critical, and you see they're trying to get back. So we had the prior levels also of 1871. Want to see how they react from 1871 to 1900. The NQ, we see that we still need to get above this 40, 90, 40, 100 level. Again, this is just one day, so people want to call bottoms. I don't want to call bottoms or tops. I just want to see where to take a better trade. And right now, again, the long is probably a better trade, but up to what point? And again, it has to be aggressive intraday trading, 60, 30-minute, those time frames versus a daily, because they can come and rip this back to the downside. So just be cautious, and we'll see if they give us some more room to the upside. The YM, probably one of the better looking charts in regards to how it looked. And again, that's easy because the components that they have in it giving a good look, but it needs to get above the 16,000 to 16,100 level. Crude actually gave a pretty strong move today, and which is kind of funny, but because you start seeing, again, always be cautious with the news when you start hearing. I started seeing a lot of crude news, so I was like, all right, 26. We had a 25 target. They went it down to 26.05 when they turned on the jets and the pipes on us yesterday at 2:30. I'm not going to be a stickler for that $25 number. Okay, we came within $1, which is within crude can have a $1 or $2, $3 range for the day. So I'm not going to be a stickler for that, and we'll see what they do if they recapture basically above this previous target area that I marked out here and give a higher low for some more upside potential. So we'll continue to look at it. Again, it was a strong day. I mean, up almost $3 on crude is a lot. So that looks good. So let's look at some equity names, and it's weird to sound with the Dow. We had Goldman Sachs gave a lot of it. Okay, a huge amount of it was Goldman Sachs regard to volume, and huge was JP Morgan. This is a lot of very weird price action. Gap down and gap up is strong up. Looking at the weekly, it's probably going to be a hell of a hammer coming into place. So you can see that they're sitting at this 200-day moving average as well, and they've been holding it so far. But it's kind of like they're lying in the sand for a little bit. So we'll see what happens and goes from there. So again, it's even with the retracement, we're going to look for probably within 2 to 4.5 weeks. We'll see exactly what this entails. Now, all bets are off if they break below this low. So we'll continue to look if they're going to have some strength regarding the financials coming into this week. We had Google, really didn't do much. Again, this could be more a setup for a type of bearish flag, quite honestly. Again, I would like it to pop up more to short into, but it's not giving that true market leadership that we're expecting. Let's look at Tesla, and you can see also with Tesla, it gave a move up yesterday and gave it all back, and then kind of chopping people around that went with the sell signal. So again, I would like to see them come back up to this 182, 180 area if they're going to pop up to give us something to short into versus what happens now. So again, we'll see what happens on Tuesday. Price line, again, given a nice tidy retracement, so I really want to see this get a little bit more overbought and then short into it. So we'll continue to watch that name. Netflix, again, is up $1, but kind of same flag type of deal. So you don't want it to break below this 82. And again, it could pop up more, which would be fine actually to these previous low pivots. And we'll just, again, trade it accordingly. I think I did Apple. Did I do Apple? Apple's just sideways right now. I really don't have anything for that. Facebook, we also have kind of that same flag formation with going back to the top of this gap here, this gap up. So let's see how if they come back below this 100 level, how they respond. And finally, LinkedIn actually is still it's hard to. I have very difficult time judging these on a daily time frame because as much as I want to short, I'm like, it just feels like a setup. So kind of just see where it goes. But again, this is a completely broken stock, but I don't want to. Everybody says that bear markets are so much easier than bull markets, but I don't find that the case. I think they're both, if you're chasing, can be very, very difficult. And just wait for your proper setups. So again, the banking sector, Goldman, we showed also JP Morgan. Here's Citigroup, and you can see it had a pretty strong. The financials had a strong, but they're very, very oversold. So just don't. There's going to be a lot of talking heads and people talking about finance group is coming back. Make sure you look at the chart, and even if you have to take your time and look on the weekly chart, which I do recommend. Again, you have your line in the sand now for this name if you want to get long, but don't let them fool you into thinking that it's a bear market. So you could get, again, if you're trading a retracement, just know you're trading, have your line in the sand, say your targets are close to the 200-day moving average, which lines up with previous pivot lows, and go from there. But don't let them suck you into, okay, now we're going to have another, ES 10% run coming up. So we want to see, this is the weekly of the ES. We want to see how they're going to react. This doesn't mean that this is going to happen again. These rip up. Again, these were both very similar in price and time movements up. And we want to see how the ES gets to, if it can even get past 1900, would be great. And then of course we have the 1958 and also the 1985 level to choose through. So we'll see what happens next week. And again, they're still holding my infamous trend line. So we'll see what happens next week. Have a great weekend. Enjoy the Valentine's Day if you celebrate it. And we'll see what happens. I think the markets are closed for President's Day on Monday, and we'll see what happens on Tuesday. I think the ES and the crew will be open, but because the volume is so light, I would suggest trying to take the day off, because that's when you got your junior people and they could just be whipping stuff around. Low volume sucks. So we'll see what happens on Tuesday, and take care.